with Dixon Technologies joins us now. Saurabh, good morning. Thank you for joining us. Walk us through revenues and the margin picture, because revenues are up 40%, and in a tough inflationary environment, you managed to keep your margins intact.
Yeah, absolutely. You are absolutely right. There's significant headwinds in terms of commodity price increases, geopolitical tension. The demand also has been slowing in some of the verticals. So clearly, in this challenging environment, we have been able to grow at around 40% revenues. There is a 60 bips improvement in margins, which has happened between Q3 and Q4, mainly on account of more operating leverage coming into the system. And also, we have been able to take the strategic price increases in an ODM business of lighting and washing machine of those inflated in raw material prices, commodity prices. And also, there's been a lot of work which has been going on the cost optimization in the company. So I think so all these factors put together have helped us improve our margins sequentially.
Okay, I'm looking at your guidance, and the guidance for for coming quarters also looks very promising. My question to you is that when you are committing to a number of about 17,000 crore, is this based on new client acquisition or ramp up from the existing business?
So it's a combination of both. So recently, if you look at, we have got into new verticals of IT hardware, where we have started manufacturing for Acer, and also in discussion with one large brand. Then we started manufacturing telecom and networking products, which is a JV with Bharti Group. Then we have got a JV with Boat into variables and hearables, which is again a very high growth market. But again, a significant portion of current year revenues would come from mobile business, which are expected to more than double this year from what we have reported in FY21-22. And then even the washing machine portfolio, we have now expanded. We have a big order book on the semi-automatic washing machine side. And also we have got into fully automatic. So it's a combination of new verticals and also expansion of capacities and a big order book in the existing verticals.
Clear the air, your stock, when it had fallen 9%, there was this whole concern around Xiaomi. The management came out and said, don't worry, be happy, nothing changes for us. What is your relationship with Xiaomi? And in this guidance of 17,000 crore, are you accounting any Xiaomi business also?
Yeah, so we've spoken to the leadership team of Xiaomi, and nothing changes. We continue to have a very strong order book with Xiaomi. In fact, my May plan, out of the total TV quantities, a significant portion is coming from Xiaomi. So nothing changes on the forecasted plan given by them. Nothing changes on our current assets. We have been getting a regular payment. So it's more. So we are the largest vendor on the TV side. The problem that Xiaomi faced was something on the mobile side. So we continue to have a good relationship on the TV side. Nothing changes on that side. And out of the 17,000 crore revenues, yes, 10 to 11% would come from Xiaomi as a customer, but we don't see a challenge in that, and we continue to execute their orders.
The supply chain issue, especially on semiconductor in 2021, was bad and terrible. In 2022, if it gets better, how does that change life for you?
Oh, significantly. So last year, first of all, not only supply chain challenges on account of component shortage, the other challenge was basically the increase in commodity prices, which was unprecedented. It was going up. Third, there were freight rates which had gone up. And lately, in March and April, there were also closure of the Chinese ports and Chinese cities, which also led to delay in shipments because some of the critical components come from China. But my sense is all of that is now getting better for us. The commodity prices are softening down. The freight rates have come down for us. The component shortage is hardly there. I think so. It's in control right now. And clearly, those will be big positives for us. And that's why we feel confident that we'll be able to restore our margins. And clearly, we have a big order book. And if there is a tailwind on those supply chain, then I think so we are in for a good year this year.
Good morning. This is Nayantara. I was also reading that not for the quarter under review, the fourth quarter we were talking about, but a month after that, in April 2022, you have undertaken price hikes, from washers to lighting. Can we expect more price hikes? Is there still a deficit, a lag that you need to make up when it comes to this, which could impact margins?
Absolutely. So we have taken those price hikes in Q4. There will be continued implementation of those price hikes in Q1 and Q2. We expect that the margins in both our washing machine and lighting business, which are ODM business, and where there is a lag in passing on those prices, so the margins should keep improving. My sense is lighting should take another couple of quarters, but washing machine, you should see an improvement every quarter. So Q4 better than Q3 and Q1 should be better than Q4.
Now, Dixon has received cumulative approvals for what? 5 PLI schemes. I was also reading that you've given a revenue guidance uptick of 50 to 55%. Is it all because of the PLI schemes? That's a really strong growth forecast that you're giving.
Yes, it's a combination of PLI related verticals as well as verticals which are not part of the PLI. So yes, a significant portion of the 17,000 crores or a 50-55% growth that you're mentioning would come from mobiles. So we expect that almost out of the 17,000 crores, 40-45% would come from mobile as a vertical, where we are a beneficiary of the PLI. Then other PLI verticals will be telecom and networking products, will be IT hardware products. But apart from that also, washing machine and TV will also see a growth this year. We have a big order book in TV from one of our anchor customers. And washing machine, as I mentioned, we have now also got into fully automatic washing machines in addition to semi-automatic. And semi-automatic also we have a big order book. So it will be a combination of both of them. But a significant portion would come from PLI related businesses. You're absolutely right.
What role will currency play? If rupee goes back to 75 or if rupee goes to 82, what changes for you on the margin front?
So the way we work here, we have two business models. So one is called an Oem business model and one is called an ODM business model. So in an OEM business model, we don't take any currency or commodity risk, which is predominantly my TV business, mobile business, set-top box business. So here, whatever is the impact of currency on commodity plus or minus gets passed on to the customers. But yeah, it's basically the 20% of my business, which is basically the ODM business, where we have an impact on currency or commodity and it gets passed on with a lag. So if the rupee appreciates from here, definitely it'll be a big positive in our lighting and washing machine margins, where we had, of course, seen some headwinds in the last 6 to 9 months.
Okay. Last question. In terms of renegotiations, how does the cycle work? How does your renegotiation cycle work, considering that wage inflation is there, considering that right now interest rates will move higher? Would you be renegotiating on a cost plus basis every time?
Yeah, so those contracts, of course, get renegotiated depending on. So as I mentioned, in a OEM business, it's a cost plus model. So that cost is passed on to the consumers. In an ODM business, the only difference is it gets passed on there as well, but with a lag. Lag can be 1 month, 3 months. But yes, if the costs are continuously increases, we go back to the customers, renegotiate them, and we try to restore the normalized margins.
Right. Okay. Good to speak with you. We'll let you go on that note. Thanks as always, Saurabh, for taking the time out and joining in.
Thank you very much. Thank you.
Okay.